What's up, financial hacks? So for today's Saturday article, we're going to be going over how do loans work. So that's on Penny Hoarder. I haven't read it yet. Definitely intrigued to see what we're going to see. Hopefully, I'll be able to gain some knowledge, and you guys will be, get some knowledge on, I guess, how do loans work, but also the different types of loans, some of the most prominent types of loans. So let me go ahead and go to the page here. You guys should still be able to see me, hopefully. And yeah, shout out to Kathleen over here with the good article today about the loans. We won't read every single word on everything, but we'll start out reading it. All right. So what is a loan? Okay. A loan is a amount of money a person borrows from a person or company. Okay, the entity is lending the money. The lender disperses the loan amount to the borrower or payee. All right, now to get a loan and a favorable interest rate, lenders usually require that a borrower has a good credit score and other credit worthiness factors. There are secured loans and unsecured loans. A secured loan is a backed by collateral, like your house, with a home equity loan. Now, alternatively, there's a unsecured loan that doesn't require any collateral, like a student loan. Oh my gosh, got both of these. I hate student loans. But for the latter, a lender may review your credit score and credit history to determine whether or not to approve your loan application. Now, what's a loan interest rate? Now we're getting to some good stuff. All right. So there are two types of rates. Okay, actually, before we get to that, let me just read this first sentence. Interest rates refer to the amount of money you pay on top of the loan amount you borrow. All right, let me read that again. Interest rates refer to the amount of money you pay on top of the loan amount you borrow. So you may have a student loan of $100,000, but by the time you're done actually paying for that, you may have been paying $200,000, $300,000, $400,000. So like that's where they get you. They get you with the interest. So you may think you're paying $50K, but you're actually paying $150K by the end of it, or depending on the interest rate on that. That's how they make their money. So not only do they get their $50,000 that they gave to you, but they're also getting the additional $100,000 or $200,000 or whatever the interest rate is. So there are two types of rates: fixed interest rate. This is a set rate for the entirety of your loan. And variable interest rate. This is a fluctuating rate throughout the life of your loans. So you got to watch out sometimes for that too. So loans can have either fixed or variable rates. For example, you can get a fixed rate student loan from the federal government. Better at a subsidized loan where interest occurs starting at 6 months post graduation, which sucks. So you don't really have that much time to actually find yourself a job and start saving up so you can pay that student loan. They only give you a year. But anyway, in the loan with the variable rate to pay for school expenses from a bank. Now, what's a loan term? Now, loan terms refer to the length of time a borrower has to pay back a loan. For example, a 30-year mortgage would require the borrower to pay out the loan within 30 years unless it refinances. Now, there are short and long-term options. Yeah, like for a house like 30 or 15, for example. You can get a loan that spans 1 year to a couple of decades. Now, your loans terms and conditions will vary depending on the number of factors, such as the lender and type of loan. This is definitely true too, and this is another reason why she talked about this earlier too. I saw, but shopping around for your loans, you can get different rates, different terms, etc., depending on where you're getting the loan from. Now, it's important to stop here and state that borrowing money comes with risk. That is 1000% true. It does come with risk. It's essential to keep your loan payments regular and on a schedule, or you risk forfeiting your collateral, such as your car, if you neglect to pay your auto loan and hurting your credit score and credit history. So yeah, you definitely don't want to miss those. So okay, we got 6 types of loans. Now, number 1 is the personal loan. Now, a personal loan is a borrowed amount of money that can be used to fund a wide range of expenses. So yeah, this is just, your personal loan. I need some money now for XYZ. Number 2, student loans. The one everybody dang near knows about now. They just keep raising the prices on this. which is amazing. I can do a whole video talking about student loans, like real talk. I might have to. And man, the video gonna be wild. But student loans are used to pay for education expenses. You can apply for either a private or federal student loan, or in some cases both. Depending on the type of student loan and its conditions, you might or might not qualify. For instance, student loans specifically for people with bad or no credit might not allow loan money to be used for a private school. Again, also too with student loans, you can't file for bankruptcy. I believe, if I'm not mistaken, I want to say it was 70s or 80s. I know Biden was a part of it, but him, I know some others too, actually had put that in place that you can't file for bankruptcy for your student loans. So yeah, that's another reason why student loans can be so detrimental, because you can even file bankruptcy and you still have those student loans. Those things will be with you forever until you pay those monies off. It's wild. It's wild. It's wild. Number 3, mortgage loan. A mortgage loan is the money a lender gives a borrower, or more specifically, a little company, for a home purchase. Buying a home can be an intense process, and there are many available mortgage options: conventional, VA, VHA, etc. Depending on the type of loan you get, interest rates will vary. The current rate for a 30-year fixed rate conventional loan is hovering around 5%. Yep, that's yeah. There are mortgages, that one is kind of more common. And also too, that one, usually when people say they have loans or like debt, usually mortgage is the okay one compared to the consumer or like personal debt, considering that you'll be living in that home. I know Dave Ramsey will be proud of me saying that, but yeah, he didn't like, even Dave Ramsey, he doesn't like no debt. I agree, except the mortgage. They do give a exemption for that. Number 4, auto loan. Auto loans go toward the purchase of a car or other automobile. If you finance via a dealership, you may encounter an auto loan with a higher interest rate. However, a dealer might match a comparable rate at a bank or credit union, especially if you have a good credit score. So yeah, auto loans too. I know a lot of people probably have those as well. I was fortunate enough not to have to worry about that with my car that I've been having since high school. So thankful my parents hooked me up with that car. Hopefully I don't have to worry about any more auto loans. Hopefully I can buy my next car as cash, but if not, I want to pay it down as fast as possible. So I may have to get a loan, maybe depending on the car, but I want to be paying it down super fast. Payday loan. A payday loan is a short-term, high-cost loan that's usually for $500 or less. According to the Consumer Financial Protection Bureau, these loans are repaid via a borrower's next payday. It's the name. Payday loans often have a reputation for being predatory. Yep, rates have been known to fall in the 3-digit range. 3-digit range. And many state laws regulate or even prohibit these types of loans. Yeah, these loans are super predatory. You're going to see these loans in a lot of lower economic areas for sure. I've watched videos on this, on how easily accessible these payday loans are in lower economic areas versus higher economic areas. With payday loans, the interest rate on that is exorbitant. As you guys saw, it can be up to 3-digit range. So yeah, you may get a payday loan for $100 or something, or $500, for example, but you're gonna be paying like 100% of that, 200% of that, 300% of that back. So that $500 could be $1,000 to pay it back, or $1,500 you got to pay it back, again depending on the exact range from that specific spot. But it's super high. There's so many videos talking about how payday loans are predatory and how they keep you in a cycle as constantly paying these guys back. Number 6, business loan. A business loan is pretty self-explanatory. It's a loan that's borrowed to help fund a business. The money can be used to pay for business needs such as office renovations or new technology for your staff. You can get business loans through the usual outlets and typically secure rates under 10%. So look at that. You can get rates like under 10% for like a business loan, but hey, trying to get a payday loan, 100%, 200%, 300%, you'll be paying back. It's crazy like that, man. how to apply for a loan. Actually, let me see how far this goes real quick before we finish this. And they're also telling me, yeah, stay on the call. We don't want to end this call here. Okay, cool. So we're almost done. Okay, how to apply for a loan. You can shop around for lenders, consider rates, the amount you can borrow, fees, and terms. And you can fill out the application, provide details about your employment and income. And for some loans, you need to provide information on your assets and other financial documentation. And yeah, how to qualify. Credit score, definitely key. Hopefully you have a good credit score and excellent so you can get better rates and not have to pay hopefully as much back in interest. Steady work history. Mortgage lenders usually like to see a 2-year job history. That is so true. That is so true. That is so true. When I got this house here, oh my gosh, they went back through everything. I had to show them 2 years worth of I think I was able to do it through a PDF on my bank. Maybe it was screenshots, but it was a lot. It was a lot of different files I had on that. And initially, I had things crossed out, but they were like, "No, you can't even cross anything out." So I had to redo everything without all the cross outs I did. It was a lot. It was a lot of paperwork, and they definitely look back. If you are a person who doesn't have a regular like 9-to-5 job, if you're like an entrepreneur, like a business owner too, definitely check out Roberto Blake. He did a video talking about how he was able to get his house being a entrepreneur because he's a business owner, and he doesn't work like a 9-to-5, so he was able to get his house, and he kind of talked about it. If I'm not mistaken, one of his videos, you probably could type in Roberto Blake and then type out buying a home. He should be able to talk about it on there. I'm gonna give you also another hint too. You can do if you are an entrepreneur or business owner. This is not if you have like a LLC. This is like if you have a oh man, I'm going blank right now. It's the one right above it. I'm going freaking blank right now. Probably this freaking light right there. But you can actually write your own checks to yourself. You like for your company, for your business, you can write yourself like a W-2, if that makes sense. Like you can give yourself pay stubs. Depending on what software you're using, you might actually have to hire somebody, just to make sure you're doing everything correctly. But you can just pay yourself like that through your business. So then when you show the mortgage company, or another place you're getting a loan from, you can have it documented that, yeah, I've been working at this job, which so happened to be your business. But you can show that as well. I think Glenn and Cameron, I think that's how he was able to get his mansion or his big house doing that. Because technically speaking, he's a worker for his business. He wasn't getting paid like 5-10K a month or something like that he was paying himself. But that's just a way you could get around that too. And then what to look at when applying for loans. When looking for loans, consider the following before you apply. Check out alternatives or traditional banks and credit unions. Yep. Calculate the approximate monthly payment. Yeah, you definitely want to check out the approximate monthly payment. Make sure you can actually pay that without dying. See if there are any origination fees or prepayment fees. You want to check that out too. Make sure that they're not going to pay you or charge you more for paying it out early. Apparently, some student loans do this. I was not aware of this, but I was looking online, and some freaking student loans charge you for paying it out sooner. Like, man, it's crazy. And then you can look at interest fees and review fixed interest rates versus variable interest rates. So yeah, this gave us a pretty good rundown on what loans are, different types of loans, and ways to get a loan, and also things to avoid when getting your loan. I think this was a good article. Again, shout out to Kathleen Garvin. You did a great job there. Anyway, guys, if you have any other questions about loans, or maybe you have any new news about loans, definitely leave those in the comment section below. Hopefully you guys learned something new. I think I learned a couple more things that I wasn't 100% aware of, or maybe I wasn't 100% sure on that I know now. And yeah, F student loans.